What are you seeing? What's given the markets pressure this morning? Is it the Microsoft results, or is there something else?
I think it's a combination. Hi, Frank. Good morning. It's a combination of factors. I think, first of all, perhaps the market is just taking a breather. It's been a hell of a start of 2023. Markets have been hot. Obviously, as we get into earnings season, that's the moment of reality check for certain companies for earnings estimates, where we still believe that earnings estimates in aggregate are too high.
Oh, that's a clear-cut answer. I like that one. Let's talk about what we saw with Microsoft. Tech's so important for the markets. When you look at Microsoft, Google, and Amazon, it's almost a quarter of the NASDAQ. Tech in general, about more than a quarter of the S&P 500. Microsoft has so much influence. What we saw from Microsoft with that weak guidance, how do you see it influencing the market day going forward?
Yeah, well, I think there's two answers to your question. I think the first answer is let's talk about the global economy, because what's happening in the actual economy is obviously spilling over into companies like Microsoft and what they're seeing in terms of, revenue, sales, et cetera. We've had 7 consecutive months of slowdown of leading indicators almost across the world. If you look at PMIs, manufacturing, services PMIs of almost all major economies, we're in contraction mode. We're below the 50. And that's why all the pundits, everybody is talking about recession over 2023. The second answer to the question, which is obviously causing weakness, thus the fear around the earnings season. The second point is something that we simply have to unlearn. We've been taught over the last actually almost 10 years to talk about aggregate terms, to talk about tech, where accommodative monetary policy, very, very low cost of capital has been the ultimate fuel for sectors such as tech. And, if a company is a tech company, let's buy it because it can benefit from the fuel. We need to unlearn that. I think there's no such thing as tech. There are individual companies that are riding on specific business models which have specific cash flow profiles. Some are more legacy, known, historic businesses. Others are brand new, where cash flows are very much weighed into the future.
All right, so now the build up to the big question here, Annika. We heard Marko Kolanovic from JP Morgan saying the worst may not be over. He still believes that there could be a recession, that he's bearish on equities. Where are you at when it comes to equities, and should we be cautious? Is the China reopening perhaps giving us a false sense of security going forward?
Yes, well, we would certainly pronounce on the word caution. I tell you what, the biggest issue that all asset allocators have today. On one hand, we all know that if everybody is screaming out recession, 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 this is arguably the most anticipated recession in history. If positioning is already such, you would argue, well, that's already priced in. That's already known. And in fact, you have positives at the margin. European energy crisis is almost behind us, China reopening, etc. The other issue we have is just the simple fundamental that we have today, which is twofold. One, weakening, cracks in the economy. And two, maybe most importantly, central bank policy. The market is getting very excited about the world, suddenly changing. The market is anticipating that the Fed, for example, is going to make its pivot this year. The market is expecting lower rates than the Fed themselves. That gap is this year's story. And I think, given what central banks have gone through in the last 1 to 2 years, credibility is extremely important. And that's why we think it's too early to expect them to aggressively pivot, which is why we're cautious.